Hey everyone, and thanks for jumping back into the Equityverse. Today, we're going to talk about Tesla, and we're going to be providing a general market outlook. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. In this video, what I'd like to do is reflect on some of my prior views, talk about the market, talk about things that I got wrong, and reflect on that, and talk about things that went my way at various points. And then I want to talk about my current views on Tesla and what I really think about its outlook over the next few years. Okay, so I'm going to go through this as systematically as I can, try to cover all bases, and we'll just take it from there. So back in 2017, 2018, 2019, my view on Tesla was that it was undervalued. Okay, I was very optimistic about Tesla's future back over here, and I thought it was only a matter of time before we got a larger move to the upside in Tesla. Okay, the move that eventually came exceeded all of my prior expectations. I would have just, if you look at this move here from July 2010 to this high, that was a 2,300% move. Imagine telling someone that we would exceed that, right? From this low here to that high was a 4,100% move. So the move by Tesla far exceeded my expectations, right? I did not think it was going to go as high as this. And I certainly became increasingly cautious on it as it climbed this entire move. Okay. And in early 2022, when it was apparent that we were going into a bear market, right? The S&P, not Tesla specifically, but the S&P, when it became increasingly apparent that we were going into a bear market, I was very bearish on Tesla, very bearish on it. And for a while, that bearishness was in fact rewarded. We had a series of lower highs that so many people remained bullish on because they were still living in this move, right? They were still living in the buy the dip, buy the dip mentality. It's going to go to new all-time highs immediately, right? And what ended up happening is the asset then dropped 75%, almost 76%. So a 76% drop, and there's a lot of people that were in the sort of the buy the dip mode. Now, the first thing I will say before we get too much further into this video is, there's definitely two types of people, I think, when it comes to Tesla. There's two of the most common types are perma bears and perma bulls. Over long periods of time in the stock market, while both can be rewarded at various phases, it's better to be bullish over a long period of time, right? If you can weather 70 to 80% moves to the downside, then in general for the stock market, it's better to be a perma bull than a perma bear, right? It's okay to be cautious, but that's, and it sort of goes back to the saying of, the bears sound smart, the bulls make money. But I want to talk about this drawdown by Tesla and talk about whether this is the low here, right? Like the current drop, is that the final low? Or do we take out this low? Or do we take out that low? So again, to recap, I was fairly optimistic on Tesla back over here. It then far exceeded my expectations. I became very bearish on it, very, very bearish on it. And I was looking at a potential 77% drop, at least. The reason that I arrived at a 77% drop, well, one of the reasons was because, if you go look at Bitcoin had a 77% drop. You might say, well, so what? Well, Netflix also had a 77% drop. right? 77%. I mean, if I actually get, you know, the exact top or so, I mean, it's 76.96% or so. So what? Meta, 76% drop. So almost 77%, right? So almost 77% drop. So I was looking around. I'm like, well, look, I mean, you got Meta that's already dropped 77%. You had Netflix that dropped 77%. Bitcoin dropped 77%. It seems like it's possible that Tesla could drop 77%. Now, what's interesting is it did drop almost that, but not quite. 75%, 75.5% or so. So it didn't make it 76%, and it didn't make it 77%, which is what some of the other ones did, right? So the other stocks that we were looking at, and even Bitcoin went down about 77%. And so for me, I was looking at it thinking, hey, what if Tesla goes down the same amount? Then it would put it at just below $100. And then I think I put out a worst case outcome of in the 60s, right? That's what I did. I mean, the receipts are there. I'd prefer to try to learn from my mistakes than hide behind them and pretend like they didn't happen. I think one thing that that can be frustrating with being a sort of a for lack of a better word, content creator, especially in sort of the financial space. I think one of the hard parts is that everyone sort of pits themselves against each other, and they sort of for bragging rights and dunking rights. My sort of view that I've tried to adapt over the last few years, which I'm not always successful at, is don't dunk on others lest you be dunked on. Because oftentimes when you get to the point where you want to dunk on someone else for having the wrong view, that's usually the time when you should be shifting your own view, right? It happens constantly with investing, where you have a view, it turns out to be right, and then you want to go dunk on other people, but rather than wasting your time dunking on other people for being right, you should just be changing your own view. To provide an example, I mean, I was very bearish on Tesla throughout all of these lower highs, right? All of these lower highs. And then when I watched it finally drop to that 77% target, sorry, I didn't mean to pull up that one. I was very, very happy because I'm like, look, I was right. It made sense to be bearish on this thing, and it could go less than $100. And it felt like I basically could say, look, it was not wrong to scoff at the idea of buying these dips over here. The problem, here's the issue with investing, and especially being a content creator in the space, is that despite the fact that all of these are lower highs, and unfortunately these are still lower highs, and there's no guarantee that the trend changes, but despite that, the people that remained perma bulls throughout this entire phase, they're going to act like they were right? Because it's off the lows, right? It's off the lows by about 100%, right? Of course, the problem is they were also buying it throughout this entire phase. And so yes, while it's off the lows, it's one of those things where, a lot of those positions are still likely underwater. But again, with investing, you shouldn't spend too much of your time worrying about what other people think and what their views are. Just look at the bigger picture. I think that's what makes sense. Look at the bigger picture and see what's happened. So far, Tesla has been putting in lower highs. But this is also a significant low. I don't know if we're going to take out that low. The problem is that I like Tesla as a company. I think it is the blue chip EV stock, right? I mean, if you think about all the EVs, I think Tesla is the blue chip. It's like the Bitcoin of the cryptoverse, right? So Bitcoin is the blue chip of the cryptoverse. Tesla is the blue chip of EVs. And I found myself in a position over the last several years where I used to be bullish on it over here, And then I watched this happen, and it's just been really hard, to not look for sort of the bearish view. But I also don't want to feel like I can't speak up about my mind on Tesla just because it bottomed out here 1% higher than the target, than the initial target that I set. That video that I made at 122 was here, and I said, all right, the sort of the initial target would be at around the high 90s, and you can see that it basically found a low at just above that, the 100s. One lesson is that sometimes it's close enough, right? Sometimes it's close enough. It doesn't have to be exact. If you're buying an equity 77, 75, 76% off the low, like Meta, like Netflix, whatever, as long as you think that company's going to survive, it makes sense. For the record, on ITC Premium, I was very bullish on Meta at 77% down, and the reason was because I had just watched Netflix do the same type of move. So like, look at Netflix. Netflix made that 77% drop. So I was watching Meta make that same drop, but when it was below 100, and saying, look guys, this is a great opportunity to get into Meta, right? Anything below $100 is extremely valuable, extreme value. So I was hoping to make that same sort of announcement with Tesla, and it didn't hit that 77% threshold. That's my own mistake, right? That's my own mistake. I think that, it would have been just like, after it's 75% down, or even hell 70% down, it would have been okay to say, from this point, while it could go lower, it probably won't go too much lower. So that's sort of my view on how in the future, I think it would make sense to sort of view these larger drawdowns, is that when you get like these larger moves to the downside, to not get so worked up over whether it goes 76% down or if it's 77% down, right? Because then, the people that were bullish on it throughout this entire phase will claim that they're right, even though it's still lower than literally every single one of these lower highs, right? But they'll still act like that was the right view to have. And it's just not a fun experience, right? To sort of go through that. So I want to talk now, sort of now that we've gotten that out of the way, and now that I've sort of raised my hand to say, look, now that brings us to sort of today. Like, where are we today, and what does that mean? Does it mean that we can't take out the low, or could we take out the low? And I just want to provide some thoughts onto that. I think there's sort of two outcomes here, right? And I don't think these outcomes should be that surprising. I think the first outcome is that if we don't go into a recession, then I think this is the low, right? So if a recession is avoided, then I think the low is in for Tesla. If a recession is not avoided, then we could certainly go to that low. And it would in fact be interesting if at the end of the day we ended up going 77% down, but it just took a lot longer, right? Like, like if it still went that 77% drop, but it just took a little bit longer to get there. And it would take a recession, I think, to get there. I don't think it will go to less than 100. It looks like it went to 101.81, right? I don't think it's going to go sub 100 unless you get a recession. So if a recession comes, good chance Tesla takes out the low. The problem with some of these, with some of these stocks like this is that, if a recession happens, then, these other stocks that are already so much higher, like Netflix, it's so high that even if it were to drop from here, even if it were to drop 60%, it's still putting in a higher low, right? And there's no guarantee that it's going to do anything like that, right? Like, even if Meta were to drop 50%, it's still a much higher low. Or if it dropped, say, 30%, right? But even in a recessionary environment, if it were to drop 50%, that's still a higher low. And with Meta, back when it was sub 100, is that this is likely the low regardless, because it's so far down. It went that 77% drop. it's probably the low regardless. So even if you do get a recession, things like Meta would likely just put in a higher low. The problem for other assets like Tesla is that if a recession occurs before it gets a larger move to the upside, then a 50% drop would put it at that 77% drawdown target, right? That's where it would put it. So I think it's relevant to keep that in mind, that like that could happen. And I think it's foolish to say that it can't happen, but I'll also say it's foolish to say that it has to happen. Okay? I'm of the opinion that if it does happen, it would be a great opportunity. But there's no guarantee that it does. And we don't have a ton of history to go on for Tesla, but there is a similar type of move once upon a time where it had a larger move to the upside. And you can even see there was these levels that it tried holding, and there was one wick below it, right? And you can see that throughout this entire phase, on either side of this wick, it tested this level here, right? This level right here. And so I do wonder if we're repeating a similar type of thing, right? Where you test these lows, right? You have a major impulsive move to the upside. And following that, you sort of set a floor. And then you go in and you capitulate below it at some point, just like we did right here. And then you continue to test that floor for a while. And then eventually you get another move up. Now, if Tesla were to follow that pattern, then what it would look like, right? I mean, if we would just sort of overlay it, what that could mean would be, you know, this move here started in like late 2016, and then it found found this high here about half a year later. So what it could mean is, you know, finding support around here and then bouncing up to slightly new highs, coming all the way back down and retesting this low again. You know, I mean, this occurred, you know, about 3 years later. So that would be like, you know, testing it in like 2027, as crazy as that sounds. And then going up. That's essentially what it would look like if we were to emulate that move, right? Basically, you know, hanging out in here for a while and then eventually moving back up. This low here occurred during a recession scare. We did not actually get a recession in February 2016, but it was a recession scare. And so I don't know. I mean, look, we have an inverted yield curve. We've got all the signs that the labor market is slowly softening up, but there's also a chance that the Fed pivots before things get too bad. Maybe they pivot too late and we do go into a recession. And in that case, Tesla could take out that low. But, you know, I just want to be like open and honest. I mean, I used to be very, very bullish on Tesla back when it was, you know, in 2017, 2018, and 2019, before this 4,000% move. I was very bearish on it in 2022. I was also pretty bearish on it even in sort of the parts of 2021. I mean, we still had this major move up. I mean, really, I think through most of 2021, I wasn't that optimistic on it. I felt like the larger part of the move was behind us, and it was. I mean, we did go about 40% higher, if memory serves me correct. Yeah, about 40% higher. But I mean, if you're sitting on gains of like several thousand%, that's where people don't care as much. And that's the hard part, is that like you have some people that get in over here and they're happy to just kind of sit out after it's up 2,000%. You get the late people that come in that buy it up here and they get super loud when it goes up another 40%. You're like, well, okay, fine. I missed out on a 40% move, but so what? I still realized a 2,000% move. And to be completely honest and transparent, I do have a Tesla position that I held throughout this entire thing, right? I mean, I have, you know, some that I've held throughout the entire thing, throughout the entire 76% drawdown and everything. I do have some. But in terms of, you know, looking to get larger positions, I hadn't been on the lookout for that, right? Because I was looking at Meta and Netflix and saying, all right, 77% down, that's the target. And then we ended up bottoming out at like 75.5% down. And so kind of an element of watching the market get close, not hit the target, but I think, maybe it was close enough, right? Maybe it was close enough. So from here, one thing to consider is that after a lot of these earnings reports, Tesla has bounced after getting a 10% drop, right? So I think this is now 4 earnings in a row where following earnings, Tesla has dropped 10%. And then after that, there's been some form of mean reversion, right? There's been some form of mean reversion. And, whether it is just a smaller bounce back up to, basically where we are now, we've seen that maybe a little bit higher, or whether it was a larger bounce up to, the mid 200s. This bounce here actually took you to new highs. All sorts of bounces that we've gotten off of these lows, right? Some have been smaller, right? Some have been 40% move. This was a 130% move. This one here was about a 10% move. And then so far, this one has been about a 10% move. So I think when you look at it like that, you have to think, well, I mean, it's relatively, there's a chance that there's some form of mean reversion, right? Where regardless of whether we break the integrity of this low, there could be some form of mean reversion, just like there was back in late 2022, right? And just like there was in May of 2021, and just like there was in March of 2021, right? There could be some form of mean reversion. And one way to maybe visualize that is to go look at the relative strength index of Tesla. And you can in fact see that on the daily, it hit the same level that it hit during the crash in December of 2022, right? The daily RSI hit that same level. So that's why I'm saying, like, there can always be this sort of this mean reversion play that could play out before you figure out what the actual move is going to be, right? Whether it's a move back higher into the high 200s, or whether you go back down and you sort of break the integrity this low again. A lot of times there's some form of mean reversion. So I think the way that I'm viewing Tesla right now is if soft landing, right? If we achieve a soft landing, then this is probably the low. If we have a hard landing, then we could easily test the integrity of that low. I can't possibly know if it's going to be a soft landing or a hard landing. There's evidence to support both cases, right? I mean, there are prior cases where you have soft landings. 1967 is one, but even in that case, we ended up getting a hard landing 2 years later. But still, I mean, it was an example of a soft landing, and for investment timeframes, 2 years is a long time. There have been soft landings that have been achieved, even I think in the mid 1990s. I think they've, you could look at it and say that some soft landings were achieved. Even after, or maybe the late 1990s, even after a briefly inverted yield curve. So I think, I think if a soft landing is achieved, then that could be the low. If we have a hard landing, then maybe it just goes down to that 77% level, which is just slightly below that low, right? So I don't really know. I mean, I don't really know which one of those is going to play out. But I will say that I want to be, I want to be more open-minded so that I feel like I can talk about Tesla in the future rather than just, waiting to see if it ever comes back down to this low. I don't know if it's going to, right? I really don't. I mean, this low here was actually tested or this low here was put in Q1 of the election year, which is where we are right now, right? It's Q1 of the election year. So you could look at it like this and say, all right, that capitulation corresponds to that one. Or maybe, maybe there's some type of low put in this quarter. If you were to go look at say, you have Tesla, if you go look at, say, the year-to-date ROI of Tesla in, say, 2024 compared to 2012, you can see that we dip early on and then we get a bounce. Look at it, 2016, we dipped early on and then we got a bounce. And in 2016, it actually dipped even further down, right? About 40% down off the yearly open, which is exactly what you're looking at right there, right? So 40% down off the yearly open for Tesla would be approximately in the 150s, okay? Now, I know what you're saying. Well, I mean, you're saying, well, what about the daily RSI? You just showed that it was basically oversold. That's true. I mean, it is. The counterpoint, of course, is that major crashes can also happen from oversold levels, right? Major crashes can happen from oversold levels. So I think that while it is possible that we take out the low if we get a hard landing, I don't think it makes sense to like basically bet everything on that idea, okay? Because it might not happen. This could be the low here. Like we could be putting in the low here. If it wants to follow 2016, maybe it goes into the 150s and then puts in, say, like a slightly higher low. There's that chance of occurring as well. Or worst case scenario, we test the integrity of that low right there. Under a hard landing, it's possible that you could test that. The problem for me, as you know, as someone who likes to talk about assets, the problem is that, you know, I want to be able to talk about Tesla even if we don't take out that low and just say, you know, I mean, I should have been more willing to flip then rather than just sort of watch this move unfold. Again, I can rationalize it in my own mind by saying, well, I mean, look, I mean, you know, it's not like being bearish on it throughout these highs has paid, or being bullish on it throughout these highs has paid off. Tesla has not reclaimed those highs. It has not. I mean, we came pretty close, but we have not reclaimed those highs just yet. So I don't think it was wrong to be bearish on it here. I think where I was wrong was not just saying, hey, this is close enough, okay? And again, I mean, given enough time, as more time goes by, the likelihood of it eventually putting in new highs goes up. Over long periods of time, bulls are rewarded more frequently than bears, right? I mean, bulls can have, can get completely wiped out during drawdowns like this, because what often happens is people buy it all the way down and then they capitulate at the bottom, and then they sell here and then they watch it just go back up. I basically was bearish on it through here, but I did not turn bullish on it right here because I thought it could go down, another few percent. That was a mistake. I think that was a mistake. And so I do hope to sort of learn from that in the future. Sometimes I think it's just, it's good enough. And that goes whether we take out the low or not. I mean, I think that if we do take out this low, then I could still say, well, technically speaking, but I think the problem with that is that, I don't know that it was worth, just watching it go up 200% and not knowing if it's going to come back down. I mean, it's come back down a lot here. I mean, I know a lot of people are looking at it right here. I mean, it's down 40, 35, 40% in just the last few months, right? In about the last half year. So that's a pretty large drawdown for something like Tesla. In fact, if you were to look at quarterly returns for Tesla, it's down 23% this quarter. You remember in 2016 when it was down 40% off the yearly open? It still closed the quarter only down 4%. So that's why I'm saying, I mean, there's a chance that there's some type of mean reversion, right? Where, I don't know if it's going to get a smaller bounce like it did right here, sorry, I didn't even draw it at the right spot. I don't know if it's going to get a smaller bounce like it did right here, or if it'll be a larger bounce like some of these other ones, but it's getting something, okay? So if we get an uninverted yield curve in the next few months and a hard landing happens and the Fed has to cut aggressively, then it's possible that you take out this low. If, on the other hand, that doesn't happen and the Fed just starts to slowly cut and nothing bad happens, then I imagine the demand would slowly start to come back for Tesla. One of the issues, I think, and I think a lot of the reasons why it's been selling off after the last 4 earnings sessions was because the market has been rewarding good earnings and punishing bad. And Tesla's been reducing their prices on a lot of these EVs, and their margins are getting squeezed. They're reducing their prices, I imagine, because demand has slowed. I mean, don't take it from me. They said as much that demand has slowed down, and part of the reason is because of higher interest rates, right? I mean, if you're going to get a loan to buy a Tesla, the interest rate is a lot higher now than it used to be. And so a lot of these companies are hoping that the Fed will pivot so that we go back to lower rates so that then demand starts to come back. So I will say this, if we have a soft landing, then the low is probably in. If it's a hard landing, then we could certainly test the integrity of that low. I don't know which one's going to play out, but I will say I think it is foolish to assume that one of those has to play out, right? If you go into it saying that a hard landing has to play out, then you run the risk of of having watched it drop down to this low again, which is basically, kind of the same pattern from back over here, right? Of sort of getting that chance and then potentially watching it go to new highs, right? That could happen, right? Something like that could happen if we get a soft landing. But the counterpoint is that if we get a hard landing, then it's already only 50% above. I mean, it would only take a 50% drop to get down to the prior low, or about a 45% drop to get down to the prior low from where we currently are. And so if you're getting a larger drawdown in the market, while if Meta drops 30 or 40%, or if Netflix drops 30 or 40%, they're still putting in higher lows. But if something's already suppressed and it drops 30 or 40%, then it could easily test those prior lows. So that's why I think it makes sense to be more open-minded about it than I was back over here. So I think, to do with that information what you will, I will be on the lookout to see that if it can hold these lows, right? If it can stay above these lows, then there's a good chance that this is not tested, right? Like imagine we get an uninverted yield curve sometime in the next couple of quarters, and the economy just continues to sort of hum along. In that type of scenario, then you probably don't break the low. But if the Fed's forced to cut because we get some type of deflationary spiral, then that's where it could potentially break. So those are the risks, I think, involved to the upside and the downside. There's two different types of risk, right? There's the risk that it goes up and people get left behind. And there's also the risk that it goes down and the people that are betting the family farm on it now watch it get, rinsed another 40 to 50%. I think it makes sense to hedge. I think it would be foolish to assume that either of those scenarios have to happen. Okay. So that is my view on Tesla. I just wanted to sort of come on here and say, look, I know I was bearish on it throughout this entire phase. I did not flip on it here. I think here I'm more so taking a neutral stance that if it can hold these lows over the next few months, then it's probably going to hold this. If it breaks down here over the next few months in some type of larger market crash or drawdown as we come out of an inverted yield curve, then you could test that low. But I don't think it would go that much lower than that low, right? Like it could go a little bit lower in a hard landing, but it probably wouldn't go that much lower. I think we'll go ahead and wrap it up there. And I'll just add this video on there so that you guys can, so that it's there for the records, and we'll check back in with Tesla maybe at the end of the quarter and see if it's managing to hold these lows still, or if if it broke down and we retest it up. I think grand scheme of things, 5 years from now, it's not going to matter. So do with that information what you will, but in the next year, it's really hard to say. I think you can look at prior examples and come up with reasons why it could hold, but then you could look at other things, like yield curve inversion and rate cuts and say, look, I mean, if it plays out like prior cycles, it could be kind of nasty, but it's impossible to say for sure. Anyways, we'll wrap it up there. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.